productive Friday. And if you're the kind of person that looks forward to the weekend, then I guess TGIF to you. So I just sound a little bit groggy because woke up to the sound of sirens, not the sound of silence, the sound of sirens. What kind of sirens? Sirens warning of impending rocket attacks. And yeah, that was my first post-sunrise sound today. As I had to be up quite a lot last night doing certain things. Anyway, yeah, so Bitcoin yesterday had a very nice move to the downside, and it went exactly to the second buy level, the second daily buy level, which you could call support if you want, but the second daily buy level below the bottom of the central daily range. And so there was a very high probability that at that level it would not close the day below that price, and in fact would close somewhere inside, at or above that price. And boy, did it. What happened when it hit that second daily buy level? I mean, literally like to the penny, right? Okay, it depends what exchange chart you're using, whatever. If you use the index chart, you can see it very clearly. Well, it found buy pressure there. It is the buy level after all. So what happened? Well, when there's more buy pressure than sell pressure, price go up. Right? And that is exactly what happened. So it should come as no surprise that following that nice little, whatever it was, 3.4%, 3.5% dump, it bounced very nicely over the next hours and is now literally back. Last I looked at it, maybe 20 minutes ago, it's back to where it was before it was dumping, right? Like before it started a hard dump. Now, who predicted this? What short-term trader told you it was going to go exactly to the monthly level, the bottom of the central monthly range, and possibly to some targets below it, and specifically those daily buy levels? Well, Alpha Trading did, and we didn't do it with just some crystal ball. We didn't do it with some lagging information. No, we simply read the VEPS indicators that were saying there's a very high probability that it goes down there sometime over the next couple of days, maybe even today, meaning yesterday, right? And at the same time, if it would run up and close a daily above 63, then great. That would be very good for the probabilities to the upside over the next week. And what we found is exactly that. It bounced down and then bounced right back up from there, giving the opportunity to people who were fast enough on the dial, right, to take the occurrence of opportunity to get some Bitcoins at a discount, right, and along that daily support level, that second daily support level below the bottom of the CDR. Now, why does that matter? Well, it matters. And by the way, if you had bought at the bottom of the central monthly range, that would also have been a perfectly good target. Yeah, you wouldn't have caught the bottom of that wick. So what? You still would have made a very nice move to the downside and the upside, right? So why is it that the VEPs are so accurate? Well, for one very simple reason. Right? The VEPs uses what? The highly relevant maths of the returns, the means of returns, the standard deviation of returns, right? And entropy and Laplace distribution. and the probabilities and statistics thereof. Why are those the highly relevant maths? Well, because those are the maths, as it turns out, that are running in the algorithms that are built and maintained for or by high frequency trading firms and what they call quant shops that make those tools for them. Who are those companies? Those are the companies that literally control the markets. Right? They run the vast, overwhelming majority of trades on the markets, around 80%. Sometimes a bit less, sometimes a bit more. But they run the vast, overwhelming majority of trades on any asset, on any time frame, on any market. And that is why those maths matter. Okay, if they were calculating rainbow spectrum colors and figured out some way to use rainbow spectrum colors to know and predict with a high degree of probability, right, the direction of an asset, and believe me, that's what we'd be using too, if it worked better than the VEPs. Right? But it doesn't. That's why we use the actual VEPs, right? So it should really not be a surprise to anyone that these tools work the way that they do. And it should be a surprise to anyone who trades Voodoo TA if you got your trades right, because most of the time Voodoo TA cannot work because it's built on lagging information. Price is lagging information. Derivatives of price-based tools are lagging information, right? Trying to find price based solely on price is not a thing. We can predict the direction and even target areas of price based on things to do with the returns. And we can correlate it to past price action to find likely direction. So we can do that with volatility. And there's a number of other ways we can correlate things, but they're all using the returns as the basis of the information, or they're using the entropy as the basis of the information. So that's what there is to say about that. Anyway, what's it going to do next? It's going to follow the VEPs again. You want to learn how to do this? Go to alphatradinghq.com/discord. And our live stream started at 9 a.m. U.S. Eastern Time. Happy trading.